Real estate numbers have absolutely tanked across the GTA, and it's being felt from Durham region all the way across to Hamilton, with one sector in particular hitting an all-time low. If you're trying to figure out what's going on in the market right now, you're not alone, but you are in the right place as we go over the recent Toronto housing market numbers for May 2025. And we'll try to uncover whether we're near the bottom of this market correction or if we still have further to fall. My name is Morgan Little, and as always, I welcome your comments below as we go through the numbers because I'd like to hear what you're seeing out there. Be sure to stick around to the end as I give you some context to help determine what the best move is for you and your situation. Now let's start with the big one, sales, or lack thereof. In May, there were 6,244 sales across the GTA. That's down 13% from the same time last year. Now, you might be thinking, how are sales down when interest rates have been decreasing? Well, it's not all about rates, evidently. It's about buyer uncertainty. We've got inflation sticking around longer than expected, unemployment numbers are on the rise, and many buyers waiting to see if we're going to see another rate cut after 2 consecutive holds. Spoiler alert, I believe we will see some more cuts this year due to some of the reasons I just mentioned. But for now, hesitation is showing up in the numbers. On the flip side, we saw a surge in new listings, almost 22,000, which is up 14% from last year. Sellers, I think it's time we have a talk. Now, there may be a plethora of reasons why you may want to list your home right now. Lifestyle changes, the 3Ds, death, divorce, and debt, possibly mortgage arrears, or maybe you're just testing the water, and that's fine. But you need to be realistic and understand that the gap between listings and sales is growing. This is where the balance of power has slowly started to shift. More supply and less demand equals more leverage for buyers. That being said, offer dates are still happening. Now, you may be saying, how could that be? I thought that was just something that happened in a hot buyer's market like we had in 2022. Well, you're not wrong in assuming that, but this tactic is being used in the current market, especially because a lot of people seem to be confused about the actual value of a home with so many homes not selling. It's making it so sellers will list their home low to attract more buyers, and then buyers can offer what they think it's worth or what they're willing to pay, which is what it's worth, because contrary to popular belief, sellers don't set the price and realtors don't set the price. The market will tell you what the house is worth. So this doesn't mean they list the house low and then get a bunch of offers over what it's actually worth. The fact is that they may get multiple offers, but they're going to be in and around what the actual listing price or what the value of the home should be, or potentially even a little bit under. And this is often a secondary tactic. You may see a home come to market at say $599, not get the offers that they were hoping. Maybe the seller was thinking that they get a little bit more, so they'll come back at like $499, hoping to attract more buyers and push up that price to what they were hoping to get in the first place. But we're still seeing a lot of sellers stuck on their prices, and I guess that's fine if you don't have to sell. But again, we need to be realistic if selling is your actual goal, because sitting on the market is the last thing you really want to do, because it becomes stigmatized and people start to think, what's wrong with that property? The alternative is what we call chasing the market down, where you and your realtor are looking at what's sold after the fact, and so then you're bringing your price down. But if the market's declining, you are, like I said, chasing that market down. Either way, it's not somewhere where you want to be, especially if you do need to sell for any of the reasons I mentioned earlier. Now, there are almost 31,000 active listings in the GTA. To put that into perspective, that's the highest level we've seen since May 2018. We now have over 4 months of inventory, which is the amount of time it would take for all the homes to sell that are currently listed if none others came to market. Now, that may not seem like that much, but Toronto has not had more than 1 or 2 months of inventory for a long time. So what does this tell us? Well, properties are sitting longer on the market and buyers are taking their time to think before they act. And taking their time they are. But there is opportunity out there for buyers who are ready and willing to take action. But don't let articles like this fool you. The average sales to list price ratio is down to 99%, meaning that across the GTA, the average home is selling at 99% of the listed value. Under asking, yes, but not by much. And that average price is just below $1,121,000, down just 4% from the same time last year. Not exactly what you might expect of a market crash. But as always, these are broad numbers. Different neighborhoods and different areas are their own micro markets and have vastly different things happening in each. So to discuss your own journey, feel free to book a call below if you're ready, or simply shoot me a text at the number below with any questions you might have. For example, a detached home in the city of Toronto averages about 1.7 million, whereas semis are at 1.3, townhomes around $1 million, and condos about 700,000. But if we look at the surrounding 905, a detached home is looking at about 1.3 million. You can get a semi under 950, a townhome under 9, and a condo just a smidge over 600. Case in point as we shift over to Mississauga, because I know a lot of people that I'm talking to are looking in that area. We had 508 sales with just under 2,000 new listings and an average price of $1,040,000. Again, that can vary from detached down to condo. So what does this all mean for you? Well, buyers, you're definitely in a better position than you were a year ago, I'll say that. More choice, less competition, and if we see more rate cuts, that could boost affordability and trigger more demand. So this could be your time to get in before the crowd does. Sellers, like I said, please be strategic, price it right, make it shine, and you'll get results, especially if you're working with a realtor who realizes what's happening in the market. Because gone are the days of 15 offers the first day you list it, unless you intentionally underprice it, which again doesn't always work. Now, the segment of the market that's hitting an all-time low for the 7th month in a row, down 90% from the 10-year average, is, you probably could have guessed it, new builds. Though the recent Liberal government announcement, I suppose, was meant to spur activity, they said that they would get rid of the GST for first-time home buyers who purchase new homes up to $1 million and reduce the GST on homes between $1 million and $1.5 million. The only obvious issue with that is that most first-time home buyers are not in a position to buy a new home, and so I fear this will have little impact. But where does this leave you in all this? Let me know in the comments below, and I'll see you on the next one.